always start at the beginning. Naturally, you work or are the CEO of Seraphim. Is it an accelerator? Is it an investment trust? Is it, what is the business in the first place? But before we get into Seraphim, how did you land at Seraphim?
So yeah, I'm really fortunate to be working at Seraphim. I joined the team in 2016 when we launched the world's first fund focused on the opportunity in space. But the great thing is that actually I'm joining my two partners who I've worked with since 2006. So when we launched the Space Fund, we were essentially getting the band back together again, which was super exciting. So we've known each other a really long time. And in terms of why space and why now, we recognize that to address some of humankind's biggest challenges, from ubiquitous connectivity to climate change to global security, the only place to really do that from is space. Space enables us to map, to model, to manage a whole Earth ecosystem. And if you're doing a whole Earth ecosystem, you can build businesses at real scale. So from a venture perspective, that's really the opportunity for us. So we're looking to do what funds were doing in the 90s to address the internet opportunity, or the first software funds were doing in the 80s. You wouldn't set up a software or internet-focused fund now, but space is a really important opportunity for us. And we see space as very much a horizontal as opposed to a vertical opportunity. It's a multi-generational opportunity for us, and it's at the nexus of some of the biggest technology changes we're seeing, new technologies we're seeing at the moment. So it's an enabler to quantum, it's an enabler to AI, it's an enabler to autonomy systems, robotics as well. So space is potentially the biggest opportunity out there, and we see it as being $1 trillion market by the end of this decade. So that's why space. And for us, as three guys, we felt this is a unique opportunity to do a world first. So I am the CEO of the Accelerator, and I'm one of the partners in the fund. And we are now the established leading investment group focused on space globally. So we have the largest assets under management. We are the most prolific investor, and we have the largest portfolio. And we look to invest from $250,000 at a super early stage, all the way through to doing $25 million checks to lead late stage pre-IPO rounds. We launched the world's first accelerator on the back of launching the world's first fund focused on space. And then we've also now launched the world's first listed fund focused on the opportunity in space as well.
Wow.
So I have a question for you. And this is, something that maybe some of our listeners are not so familiar with space tech, but they will be familiar with this aspect of venture capital, which is timing, right? It's all about timing. What things have happened, sort of macro level as well, to enable the timing for space as a investment area to come to fruition over, the next cycle?
That's a great question, Anthony, and that really goes to the heart of why we launched our funds. So we recognized back in 2014, 2015, that the economics of space have completely changed. So if you go back to the 1980s, and the shuttle program, the cost of access to space was about $80,000 per kilo. Now we're looking at $1,500 per kilo because of SpaceX. So it's massively changed our ability to access space and put satellites into orbit. And then on the other side, you have the advent of the small satellite, which actually was invented in the United Kingdom by Sir Martin Sweeting. And what that means is that we're now building satellites that are the size of my hand. We can get satellites built and into orbit for less than $1 million. So this is completely revolutionizing the industry. Also, with the advent of 3D printing as well, then that means we can build reusable capability from a space perspective. So it's the economics that have really changed, and that means as a venture capitalist, we can, with equity investments, build massive businesses in space. So that's why it's exciting from our perspective.
And I think, from the little bit about space startups that I've seen, to your horizontal point, there's all sorts of things out there, not just from satellites and sending things back to Earth, but also capturing asteroids and mining them out in space, and then like sending the raw materials or using the raw materials out in space. Some even more out there kind of applications as well.
Absolutely. So when we started out, we recognized that satellites were really the tool, but data was going to be the business. So we were backing the businesses that were collecting and communicating data from above and addressing problems across multiple terrestrial market opportunities. So very much businesses which were looking down. But now we've built that infrastructure in space, it's about how we support that infrastructure. So it's how we look at the logistics of space, the management of space in a sustainable way, the removal of satellites, end of life as well. But also, how do we actually support that entire infrastructure? How do we refuel satellites? So from our perspective, we've now essentially built the railroads, but how are we building the picks and shovels businesses to support that capability we've built in space? And then when you've got that infrastructure, how do you look beyond Earth at the other opportunities? So looking at opportunities around the cislunar economy, at deep space opportunities, so looking at mining, exploration. But I think in the nearer term, now we've built that infrastructure, it's going to be how do we take some of our heavy industries off the planet and into space? Space is an ideal place to do energy generation, looking at solar power generation and transferring that back to Earth, or potentially taking data centers to space as well. The environment there is far more suitable to putting data centers than it is down here. Also, microgravity has exceptional properties from our perspective, from a manufacturing perspective. We can optimize materials in space, but also pharmaceuticals. It's going to be a huge opportunity for the pharma industry to optimize drug development in space as well.
Are there still things that need to be done to enable that sort of industry 4.0 or even 5.0 from, sort of a governmental, regulatory, international framework? My understanding is there's still a lot to be done on that side, especially with things such as managing space debris, right, or decommissioning satellites, that kind of stuff that you're talking about, which is fundamental to the game, but it seems like there's still more enablers that need to happen.
I think we have a real responsibility, certainly us as investors, to make sure that we're looking at the sustainability of space. Otherwise, we can't benefit from the impact it will have terrestrially. And there is a lot of activity going on in the background in terms of how we're regulating that environment from a sustainability perspective. How we're making sure that people aren't leaving their satellites up there for 25, 30 years until they degrade over time. How they're actively now looking at programs to remove those satellites over a given period of time. But also we need to manage it from a domain perspective, because ultimately, from a global security perspective, space is exceptionally important. Space underpins our navigation systems, our timing systems, our telecommunications systems. So it's important that we also manage it from the perspective of potential bad actors in space as well.
Interesting.
Some fascinating points there, Rob. I just wanted to drill into a few of the things you touched on. So you were talking about solar power data centers, drug development in space. And I suppose in my, sort of man on the street kind of view, is this like 10 years away, 50 years away, or is this kind of stuff, or those three areas happening now?
I think so much of space is happening now, and we're really at a point of inflection in terms of space. So there's been probably nearly 15,000 satellites have been launched since 1957, and the first satellite, which was Sputnik. Today, we've got about 6,000 active satellites up there. The vast majority of those, around 80%, were put up in the last 3 years by 3 constellation companies. So really, this is the point of inflection now for the industry. And we're mapping 200 companies that are putting up over potentially 100,000 satellites by the end of the decade. So we're now seeing exponential growth in terms of the satellite industry itself. Most analysts are now charting that space is $1 trillion economy by the end of the decade. Today, the economy is worth 469 billion. When we set out on our journey back in 2016, 1.5 billion approximately was invested by private sector investors into space startups globally. In 2021, that number hit 10 billion. So it's one of the fastest growing areas of venture capital investments globally. So space is already here, and it's underpinning, I think in the UK, it underpins about 18% of the UK's GDP. So that's primarily driven by telecommunications, but real revenue drivers we're seeing are around global security and climate change as well. So we're already using vast amounts of space-derived data to address problems terrestrially. You know, this is underpinning position navigation, timing, GPS. It's also Earth observation and all the opportunity that can bring, and telecommunications. So space is here today, but it is rapidly growing as well. I didn't realize, you know, last year I led our investment into a space station company, a private sector space station, which is going to be in orbit in 2028. So NASA has already given contracts to 4 private sector companies to build space stations, and 2 of them will be up before the end of the decade. So that's how quickly space is now moving. The US government is already giving out contracts to private sector startups to do refueling in space. So this is an industry that is moving exceptionally quickly.
I'll share something as well on my screen for the video viewers. But this is coverage of Starlink, right? And you can just see all around the globe, right? I'll describe it for the audio listeners, but basically it's a bunch of white dots just kind of looking like a belt around the globe for Starlink coverage.
A disco ball.
Disco ball, yeah.
No, it's very, very impressive. Yeah, so on the investment side, that's an impressive rise, 1.5 billion to 10 billion. Is that specific space-focused funds, or is it a mix of specific specialists and also, you know, certain VCs, you know, now who are more generalists, now actually waking up to the opportunity?
But we're seeing the whole market wake up to the opportunity in space, and 13 of the 15 biggest venture capital funds in the world have now invested directly into space. But we're also seeing it move into the even larger sources of capital, private equity. 9 of the 15 biggest private equity houses in the world have invested into space. And one of the things we're seeing in space is very healthy syndication. So we may well be the space specialist that's investing into a company, but we're often joined with venture funds representing other market segments as well. So insurtech focused funds, agtech focused funds, climate and impact is one of the fastest growing areas. And then we're seeing a huge amount of corporate venture capital interest as well. So we're active investors alongside of the likes of Lockheed Martin, BAE, Airbus, SES, the satellite operator. So quite often we're looking at it strategically. What is the optimal syndicate for us to really bring value to that company? The fast growing areas, we're seeing a lot of appetite from sovereign wealth funds globally. So today we have 80 nations globally who have stated ambitions around space and have also announced that they're launching space agencies. So Iceland, Puerto Rico, Africa, Singapore are all launching space agencies at the moment. If we go back 5 years ago, it was probably only 25. So all of these nations are now recognizing the economy that's being built in space and trying to understand how they can get a share of it, but also looking at it from a global security perspective as well. How do they build their own sovereign capabilities in a space environment? So we're seeing investment across that funding continuum, and also there's a very healthy IPO market as well.
I was wondering if you could talk a little bit about, some of the strategy, because obviously it started off maybe as a little bit more niche, emerging tech. To your point, it's becoming a mainstream investment theme. My understanding is you started with the fund and then the accelerator came. Can you explain a little bit about, the accelerator and how that's kind of helped feed into this mainstream and created the ecosystem and all that sort of thing? I think it'd be interesting for listeners.
Sure. So, Anthony, as you said, we started with the fund in 2016. And in that first year of operations, we saw about 500 seed stage investment opportunities. And we were Series A stage focused at that time. And all of these companies we were seeing, we thought actually they're addressing a fantastic opportunity here. And we'd really like to build a relationship with them. So we looked to identify an accelerator that we could work with that was aligned with our interests. And obviously that was quite a difficult thing to do back in 2016. No one was really doing space. And we recognized that with the companies we were meeting, they all had a unique set of characteristics that we felt we could help support them address. And on the back of that, we felt, let's build our own accelerator to support the journey of these companies so we can build that relationship through to the Series A stage. And across the accelerator, what we tend to see is, I think it's a number is probably in excess of 50% of the entrepreneurs we're working with are PhD level astrophysicists, quantum scientists, engineers. And if you give those guys 5 minutes to pitch, you're going to get 4 minutes, 55 seconds of science. You might get 5 seconds on a business and value proposition if you're lucky. So we felt there's a real opportunity there to build a VC-led accelerator to really help them better tell their own stories, attract venture capital investment, and really invert that 4 minutes, 55 seconds into that becoming the business proposition, talking about the problem, the solution, and only spending 5 seconds on the science itself. And we also knew that they have a unique technology roadmap. They have a unique set of needs, and we were able to understand what those needs are and build an accelerator that was there to meet their needs. From our perspective as well, the accelerator has been fantastic because we knew that we were going to have to actively syndicate with other investors. And it's been a fantastic platform to educate other investors about the opportunity in space and bring them into early stage deals. So we've been running the accelerator since 2018 now. We have actively supported 81 companies from over 20 countries globally. Those 81 companies have now closed $285 million in venture capital funding globally from in excess of 90 investors globally as well. So it's been a real success, and we're now starting to see those companies move through to closing out A rounds and launching B rounds as well. We've got a couple of companies there that have raised in excess of $40 million each. So we're seeing real success. And from our perspective, it's fantastic. It's a fire hose of deal flow coming into our investment fund. So we can really step up with conviction, write big checks at the later stage rounds because we've known these companies from inception. We've built real relationships and we really understand the people behind them. We started in London. So it's been a global accelerator led out of London, but we launched last year in San Francisco so we could better manage all the deal flow in the Americas. And then I'm looking to launch in Singapore to manage the Asia Pac deal flow we're seeing in September. And Asia is one of the fastest growing markets now for early stage space tech investment. We've seen 80% year on year growth there. Europe is now ahead of the US in terms of early stage deal flow and deal activity.
That's amazing because Europe definitely gets a lot of flack for not being the front runner in deep tech and hardware usually. So that's quite interesting to see it, sort of front running the US in that theme.
It is. And I think a lot of that is driven by national imperatives as well around global security. So I think that's been a real driver for countries to step up their capabilities and their investment activities. So we're seeing a lot of countries and space agencies investing into their own venture capital funds focused on the opportunity in space. So we're seeing Primo Ventures in Italy, Cosmi Capital in France. There's also others in Germany as well. So there's a lot of national interest now, which is really stimulating that early stage investment activity.
Yeah. So if I can ask, and picking up on the investment theme, obviously the world at the moment is somewhat of a softer environment for especially Series A, B onwards investment rounds. So would you say, Rob, that space in general is bucking that trend?
I think there has been a downturn in the market. There was the market dropped from a space venture capital perspective 25% in 2022, but it was still the second biggest year of all time. 46 billion has been invested into space deals since 2015, 2016. So it's a market which is on the rise overall. And I think that with venture capital, the investment life cycle is typically 5 to 7 years. So that's really riding out the typical economic cycle. And what you could argue is that today is the optimal time to be investing. Valuations have dropped. So now is probably when the winners are going to be built. So I think it's a huge opportunity for people. And what you get with space as well is, as opposed to the next delivery app or something like that, we are addressing real world problems that exist today. So the market's already there. So we're not investing ahead of the market. There is a question around adoption, but these are genuine problems we need to address today. So I think now is a great opportunity. It's why we're seeing so many new players coming into the market. Of all of the space tech investments done last year, 63% of the capital was from new investors to the sector. So we're seeing a real movement there.
I guess as well, to that resilience point, could you give us an idea of kind of proportionally the nature of the revenues that these companies are getting, public revenues or publicly sourced revenue versus private industry revenues, right? I think that kind of speaks to the resilience as well.
So I think what we're tending to see is, from our perspective, a lot of the investments we're making are into dual-use technologies. And dual-use technologies are where there's both a government customer and also a commercial customer as well. And when we're talking about government customers, in the main, that is defense agencies. That is not a sole reason for us to invest. Typically, the market isn't big enough purely from a defense perspective, but there are some great drivers there, and often they are the first adopters of the technology. They become, although they are difficult customers to onboard initially, they are very sticky once they're there. And those revenues are pretty much secure through all economic cycles. So a fantastic, referenceable, scalable initial customer. And then it is about taking the technology into other markets as well. Insurance is a very big opportunity for space-derived data, financial services, but also looking at prop tech as well and agriculture. So there's really no vertical where space can't have an impact, but we're certainly seeing that global security is the main driver for revenues, certainly in our portfolio. And the second one is really climate. So some of our companies are looking at actively at real-time monitoring of deforestation in the Amazon, and also looking at the impact of catastrophic weather events, but they're also looking at troop movement in the Ukraine as well.
So yeah, I was wondering, given the global aspiration, I think it'd be interesting to hear about the transition from investing locally to then investing globally, and the role that the BBB played in sort of, creating this LP base for this theme as well. Right, because I think it's a fascinating area of taking a niche and making it mainstream, and starting with something local and making it global, and the story of how it kind of got there.
Yeah, we have had a fantastic support from the early stages, and I think two of the key players in terms of our success have been the UK Space Agency and also the British Business Bank. And when we first approached the UK Space Agency before launching the fund, they recognised that to meet the UK government's stated ambitions to get 10% market share of the space economy, we couldn't just rely on the primes, the Airbuses, to drive that kind of scale and ambition. And that startups were going to play a critical role in that journey. However, without a space-focused venture capitalist, there was going to be no one to really catalyze investment into that activity. They needed someone to lead the deals, to educate the generalist VC community about the opportunity in space. So they really recognized the role we as Seraphim could play. And they introduced us to some of the leading aerospace, defense, and satellite and space companies within Europe. And ultimately, that's how we identified our LP base of the likes of Airbus, Telespazio, Teledyne, and SES. And we took the opportunity to British Business Bank, and they recognised that we were doing several things that really met their agenda. So we were addressing equity gap funding into deep tech at Series A stage. But in addition, we were the first fund that they'd ever met where we were also actively encouraging inward investment, and they were going to invest alongside of corporates as well. So it's a really unique opportunity from their perspective, and it was aligned to that national imperative around gaining 10% market share. And what they uniquely enabled us to do was to think globally as well. We argued that for us to become sustainable, we had to be investing into the best companies globally, and that was the only way we could also attract financial investors into the fund as well. So we could invest into a company that was headquartered in San Francisco, providing it had a presence in the UK. And that was really critical to the early success of the fund. So that fund, we fully returned that fund in 5 years for a 49% IRR. So we achieved our mission of setting out and demonstrating that you can make real returns in space. And then we IPO'd that fund on the main markets of the London Stock Exchange in 2021. And British Business Bank are still the largest investor in the fund, but we're also joined now by many large wealth fund managers as well. And our bankers with JP Morgan and Deutsche Bank all recognize the long-term multi-generational opportunity that space can be, both for them and also their underlying clients as well.
So I think I've got a question that I always tend to ask when businesses are very, very innovative and deep tech. Is there or are there a number of universities that you specifically work with, not just in the UK but globally, that say if there's someone, some of the people who are listening, that I really want to get into space, I really want to work with Seraphim, I really want them to become investors in my creation or my technology that I hopefully can build at university, where would you recommend they go?
So we've been actively engaging with universities, particularly through our Accelerator, since 2018. And we've now invested into and supported companies coming out of University of Cambridge, University of Southampton, University of Sheffield. But we've also looked at people coming out of Stanford in the US as well. So what is really exciting for me is I'm really seeing a new breed of entrepreneurs coming out of university environments. And these are typically people in their early 20s, post-PhD, and they now want to commercialize that PhD research. They don't want to do more. They want to take it to market, and they're genuinely looking to understand how they can change the world with their research that they've carried out. And what we can do with our Accelerator is give them that platform day one to understand how they need to build that business to raise $10 million in 12 months' time and genuinely accelerate their progress. So I think it's super exciting, some of the talent we're seeing. And quite often these were the brightest people at school. They'd seen their friends go off and build digital media businesses and sell them for 10, 20 million. And they're saying, well, I want a slice of that, but also I think I can change the world with this IP that I've generated from a university environment. So we're actively working with them, and we can give them all the tools to understand how they need to build it to make it resonate with the venture capital community in 6 months, 10 months, 2 years' time, to really build that fundraising narrative.
Rob, it's amazing what you're doing, and keep up the fantastic work. I mean, it's I've always admired what's been going on at Seraphim since I was at Bloomberg, and yeah, just brilliant. Keep getting us to moving, I suppose.
Absolutely, that's the opportunity and the ambition. Well, look, thank you very much for having the opportunity to speak to you guys today.